Hi there, it's Tom here again. Just going to have a quick look at the dashboard function on Traders Journal. So we're here on the logged in homepage. So once you've logged in to your membership, this is where it brings you. It's your homepage with selection of live charts for you, and we'll go through that in our walkthrough. But if you want to get to your dashboard, you click left-hand menu, click on dashboard, and it brings you to here. So what I'm going to do, I'm just quickly going to take you from each part of the dashboard and explain kind of how it works and what it represents as well, so that you get a feel for the kind of information that this produces, and more importantly, you start to understand how some of that information can be used in helping you improve your trading. So the first thing to look at is in this top right hand corner we have a selection which gives you a drop down to select the period of time that you want all the information on your dashboard to reflect. So whether it's 1 month, and you'll see all of these change depending on what's gone on in the last month, or 6 months, today, year to date, all time. So all time is easiest just because it gives me lots of data that I can show you through. So starting in this top left hand corner, we've got total trades versus trades taken. Now this is separated by each strategy. So if you've already looked at our strategy video, you'll understand what that means and how to create your strategies. If not, then you need to go to the strategy video, have a look at that, see how the strategies are created. Each strategy you create will appear on these charts once you've put in some diary trades, once you've placed some trades according to that strategy. So here we've got test 1, which, believe it or not, was a test. And then a couple of other strategies. Some are mine that I've created myself, some are based on other people's and have been modified, and some are just out of the packet strategies that I've put onto the system and then tested. You can see along the bottom that there are 3 different bars for each one of these strategies. Now there are lots of different ways of getting the information from this. You'll see as I hover over the top of it, it gives me the numbers. So we're looking at a strategy here, test 1. So total trades, you can see, is 8, trades taken 8, successful trades 3. Another way to look at the results, if you like, is if you hover over one of these at the bottom. So total trades shows you all of the total trades. So the total trades taken by strategy. Trades taken, successful trades. So you've got test, fib retracement, a 15-minute Momo, and the moving average, crossover, swing trading. So not all of these are ongoing trading. Some of these have just input some of the data to populate this so that we can have a look at exactly how it works. So if we hover over this one here, fib retracement, 15-minute fib retracement, one of the strategies that I've adapted from another strategy that I purchased a long time ago. Very, very high win rate, relatively small risk reward, sort of 1.2, 1.5 to 1, but it returns at 70-80% win rates generally. But what we're looking at here is total trades versus trades taken. So this tells us that according to the back testing, according to the results I've put into my strategy, the back testing, the total trades over this period of time would have been 16. The trades that I've taken, that I've input into the diary, are 13, and the number of those that are successful are 12. So basically, I've taken slightly fewer trades than I would expect. I would expect to take 16, I've taken 13, and 12 of the 13 I've taken have been successful. Now, I mentioned in some of the other videos the definition of successful. On Traders Journal, a successful trade is a trade where you follow your strategy to the letter. So your back testing, in this case my total trades, is based on perfect execution. Because when we test a strategy, we don't have all of the emotion and all the confusion, and we're not there over the charts looking at the money tick up, tick down. We simply execute each trade exactly as the strategy suggests. Sometimes even we automate that in our testing. So when we then talk about successful trades, if we are unsuccessful in any of our trades, we allow our mind to get in the way, we don't execute it according to the strategy, we need to highlight that because that will throw off our results. All of this dashboard are about tracking real results and comparing them to expected results. The aim is that it highlights variance. So If there is a noticeable difference, then you have to ask yourself, am I trading it correctly or not? Again, this dashboard should help with that. Has the market changed? Is the market changing? Every strategy that exists goes through good periods, bad periods in the market. Many strategies have actually had periods where they haven't worked in the market. Sometimes for years they haven't worked. Even if you go back and you look at some of the testing of some of the classic trading strategies, like the turtles strategy, the 20-day high or 40-day high breakouts that they used to trade, there are periods and financial instruments for which that would have been a loss-making strategy for years on end. Over a 10-year trading life, it was a very profitable strategy. So again, markets change, and one of the reasons this tool is so useful is that it's designed to highlight when either the market changes, or when you are underperforming, or when a particular strategy is underperforming. So here, what do we read from this one graph on the fib retracement, 50-minute fib retracement? So trades taken is a bit lower. So I've got to look at that and think, okay, why is it a bit lower? Are there trades that I haven't taken that'll be highlighted later on? So I've input them in here as non-taken trades. And if so, why didn't I take them? Again, that'll be highlighted in here. And then the next question is successful trades, 12 out of 13. That's not a bad success rate, but I still want to look at the one that wasn't. I want to know why wasn't that successful? What was the problem? Is that something I need to address? Some of the other strategies, here we are, test 1. Total trades expected, 8. Trades taken, 8. Bang on, great. So the market is relatively solid. I'm taking the number of trades I'd expect to take in that period of time. But most of them weren't successful. So for whatever reason, there's a problem with that strategy that I am psychologically not managing properly, because I'm not producing, I'm about 40% successful, which is not sustainable. And what it means is that whatever results came out of the backtesting will be null and void, because I'm not trading that strategy successfully. So I should just knock that one on the head if it's going to carry on like that. Quick note here, 8 trades taken, 8 trades due. There's not enough data there to knock that on the head. I would definitely want to know why it's been unsuccessful, but I wouldn't pull that strategy based on 8 trades. So this 15-minute trade, again, total trades taken, bang on, happy with that. Successful, only 7 out of 9. Even there, I'd be concerned. I'd want to be around sort of 90% successful trades, really, which in this case would be, 8.5, 9. I want to be getting them all successful. So why have I been unsuccessful there? And again here, moving average cross. I'm only partway through inputting that data, so the trades taken are off. Although actually, I think actually there are some trades in there that haven't been taken. There's 2 or 3 trades that are marked as not taken, which again in the diary entry section you'll see how to do that. So I've marked some trades that I should have taken and haven't taken, and so there's a variance there. And again, with successful, 5 out of 5, great. So that strategy is working, and I'm able to psychologically manage that strategy and perform where I'd want to. So we'll move across onto equity curve. Everyone kind of knows what an equity curve is. An equity curve is each time you place a trade, profit, loss, whatever it may be, your equity curve shows you in total how much equity you have. Now this equity curve is designed to start at 0. So it doesn't take any account for your starting balance. So this shows a profit and loss rather than your total equity. Again, there are different ways of seeing the data. You can see as I move along here, it splits out every one of our strategies and it tells me where it is, gives me numbers where it is. If I come down here, there's a bit more going on. There's some more numbers there. They're all in positive. Happy days. Oh, not there. Oh dear, that's not great. Yeah, so that's one way of seeing what's going on. It highlights the dates at the bottom and at the top of the floating screen, and shows you exactly what's going on. And then again along the bottom, you can select. So if I wanted to see all, black line, there you go. Hover over that, and it gives me my total equity curve for all of them. This is an incredibly useful graph in terms of comparing performance within strategies. All is great because that goes to show overall we're making money. But for example, the moving average cross swing. So this is a relatively recent addition. You can see nothing was done until recently, and we've had a bit of a dip followed by an uplift. Others, 15-minute moment. So you can see that one actually hasn't had any real drawdown so far. Tests on very little. Fib retracement, yeah, early on, a couple of big winners, and then quietened down. You can also see from where the dots are located when trades were taken. So that gives you some ideas of how frequently those trades are coming through as well. But the all is the compounded results of all of them. That is, what you want to see going up. But each one of these and the relationship between them is fascinating, and you will see if you have different types of strategies. If you have a trend following strategy and then you have a mean reversion strategy, then you may well notice different peaks and troughs for each strategy, which is great. As long as this line, as long as your overall equity goes up consistently, then actually it's good to hedge possibly a trend following system with a system that does rely on mean reversion or some sort of consolidation or trading the range or whatever it may be. So this is a really interesting way of comparing the performance of your different strategies. So I'm just going to scroll down a bit and have a look at what we've got next. So this really is this is back to the total average trades per month versus total average trades per month actual. So this again gives in a monthly time frame, because this up here is all time, and that's giving some sort of calculation based on how many trades we've taken to date, how many we'd have expected to. This breaks it into a monthly box. So in backtesting, how many trades will we expect to have taken over a month? So you can see here with test 1, 33, and we've only taken 8, or averaged 8. Fib retracement, we would have expected to take 3, and we've taken 16. Now both of those results would have concerned me hugely. I would either be going back to the backtesting and thinking, hang on a minute, there's something not right here. Am I trading the same financial instruments that I backtested? What's going on? And I would look at all the setups that I'm trading. Are they genuine setups? Are they in line with how many of them are successful versus not successful? Same here again. Average trades per month backtesting 3. Average trades per month 9. This can sometimes happen when you're if you're trading multiple instruments. Then you can get these results. If that does happen, then what you can do is you can actually add a strategy for each instrument. If you're trading hundreds of instruments, that doesn't make a lot of sense. But I'd recommend against trading hundreds of instruments. But if you're trading a couple of different instruments, then set up a couple of different strategies, and this will make a lot more sense. The reason for this again is that the backtesting will give some kind of idea what number of trades the market produces in line with your expected strategy. This shows you how many is currently being produced, and the relationship between these two are going to be an early indicator that either the strategy itself is proving less successful or is changing, or more likely that the market is changing slightly, and that for example, you may find that, bizarre though it sounds, if you have a this is a trend following strategy here, so it may well be that during trending months that this actually, the average trades per month, the live average trades per month goes down, because when it's in a trend, a single trade can go on for days and days, possibly even weeks, whereas this may well go up when the market is not as favorable and it's chopping and changing, and you're getting in and out and in and out and in and out of trades in an attempt to catch a trend. But the key thing really with this is to look at, is the market producing the number of trades that you expect? And if not, why not? The next graph here is profitable trades versus profitable trades expected. Now these are percentages, so they're generic. So these should be relatively close. This again is a really simple, visible tool of your backtested profitable trades and your actual profitable trades. Now, whilst it looks lovely to have actual profitable trades slightly higher than expected, so 77% profitable trades versus 70%, 40 versus 3, but whatever it is, even in a positive direction, if these numbers start to become too different, then what it can mean is that, again, the market is changing, that the strategy is changing the way it has worked, or it could actually mean, as is so often the case in the market, that you are coming up to a change in market behavior. So it may be that you have a run of winning trades, and that actually it turns this profitable trades percentage into a nice high number, but higher than you would expect. And bearing in mind these profitable trades, according to the back testing, are averaged, are a percentage over a number of trades, maybe 6 months worth of trades. This will have taken into account the peaks and the troughs. If this percentage rises and rises and rises and becomes too different, then what it may well mean is that you're expecting a change in market behavior. Because unless the market has changed fundamentally, if it's up here, the chances are it needs to come back down here. Now, the only way that's going to happen is a series of losing trades. I'm absolutely not saying you should stop taking these trades, because the point is that when you did this backtesting, it worked, right? So these numbers work. They make money. They're profitable. So this trade setup is based on being profitable 47.37% of the time. This is based on being profitable only 33% of the time. This is based on being profitable 70% of the time. So you don't need this to be profitable 70% of the time. It'd be lovely if it was, but it won't be. And if you do see this 40% go to 50, go to 55, go to 60, rather than thinking that you're an amazing genius who's created or bought a strategy that is pure magic, and actually the reality of it is that in the not too distant future, as I say, unless the markets have fundamentally changed, that will need to come back to this level. And the way that will happen is a number of losing trades, which will bring that average slowly down and down and down until you're back somewhere near this level. So actual trades should be, your percentage profitable trades should be in the region of this. If it comes down, the same is true. So if the number of winning trades is down, then again, it may well be one of two things. Either the market has fundamentally changed, and you need to look at that, maybe to retest some of your back testing on more recent charts. But if that isn't the case, then it means that that is just one of the lows, one of the drawdowns, and that it will revert back to this level. If you've properly tested it and you're trading the same instruments that you tested on the same sort of time frames, etc., 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 and you're trading them successfully, then it will return to this level unless there is a significant fundamental change in the markets. So really important graph here to keep your eye on. Now this is where it gets a bit more complicated, but hugely useful. These are unsuccessful trades by reason. So you remember up here we were looking at successful versus unsuccessful, and some of these where we said, oh, there's a lot of unsuccessful trades with test one as a strategy. But even with let's look at, so even with this, even with the 15-minute trades, there's still two unsuccessful. So what we want to know next is, why are they unsuccessful? What is it about these strategies that I personally don't seem to be able to successfully trade? Because I'm trading this one successfully, so I can't be a complete idiot, right? Well, maybe. But anyway, the point is that there's something going on. There's a reason why I'm not trading these successfully. So we come down here, unsuccessful trades by reason. When you put a trade into your diary, you close it off, and you mark it as unsuccessful, it will ask you, why was it unsuccessful? What happened? And you have to select one of these. Now, I appreciate there are alternative options. If there are alternative options, then first of all, please email me at tom@TradersJournal.net. Email me and let me know, because I do want this to be really useful and comprehensive. I mean, we can't have an endless list, but if there are generic things that can go in here to help, that would be brilliant. But here's some of the generic ones that I got from the book written by M. Toma that I mentioned in some other bits and pieces, and also that I find personally useful. So complied with plan. Now, that really shouldn't be. I've got a couple in here that say complied with plan. So there's one in there, and there's two in there where I complied with the plan, but it was unsuccessful. Now that shouldn't really be the case, because by nature, unsuccessful trades don't comply with the plan. So some of the other alternatives on here are manual exit due to fear of losing profit. So that might be where you take profit before it hits your take profit, or before you get a signal to get out, because you're 100 quid up, 200 quid up, 500 quid up, and that's a lot of money. And you look at it and think, oh, well, I could leave it and make the other 100 quid, or I could just take it now because otherwise I lose everything. So you highlight that. You can see in the 15-minute Momo here, That's one of the failed trades, one of the unsuccessful trades. That's what I did. So I was scared of. So then you look at it and go, well, what type of trade is it? Is it a trend trade where I'm holding on to it for a long time? Do I need to be better at managing that trade? Do I need to move my stop so that I'm less worried about losing profits, etc., etc.? So ask yourself some questions. How can you manage that failing? Then up here, what's the other one here? Manual change you to fear of stop out. So again, what I've done here is price has come back towards my stop, and I thought, oh no, it's going to stop me out, but I still think it's good. Because of course I know that, which I don't. So I've looked and gone, oh well, if I just bring my stop below this low instead of this low, then it won't stop me out and I'll be fine. So what that means is that it wasn't successful because I moved my stop, and it then took me out at the new stop, and I then felt like a complete idiot probably for the rest of the week. But what this does is this highlights which strategies you personally are struggling to succeed with, and it gives some sort of inkling into what kind of things you're struggling with. And once it shows you that in front of you on a screen in detail, and it starts to pile up data after trade and trade and trade, and you start to see patterns in this behavior, that gives you the tools to look at why you're not able to trade that. Why, two here that are traded perfectly fine, these ones aren't. What's going on? Why is it not working? So it's really, really important to use this to assess your personal ability to trade these strategies. Not all strategies are right for all people, and this is one way of finding that out. That said, lots of these things can be overcome with simple systems, reviewing certain aspects of that trading strategy. But all I will say, the caveat is, if you do review aspects of that system, that trading strategy, like I said, so if you do decide to trail your stop here to prevent you chickening out through fear of losing profit, then go back and retest it. It's a different strategy. So you can either update this strategy or put it in as a new strategy, but the results will be different because the results you've tested for this did not include you following with that stop. So the final one of our charts down here is missed trades by reason. So this is when you put a trade in that you didn't take. Sounds ridiculous. Go to diary, put a trade in, and you select you didn't take it. That's really important because, again, your back testing includes all the trades. It doesn't assume that you didn't take a certain trade because you were eating lunch or at work or taking the kids to school or whatever. It counts every trade. So what we want to do is we want our comparable data that's all up here, all this comparable data, we want that to include every trade. But we don't take every trade because we are humans and we all have lives. And so what that can mean is that if we're just using our profit and loss to judge our performance by, then we can look at our P&L and go, well, hang on a minute. I was meant to make X amount of money. I haven't. I've lost money. The system's broken. The strategy doesn't work. I'm not conned out of it. I can't believe. Actually, it could be as simple as there were two great setups that fell perfectly into the strategy. I didn't take them because I was doing something else. So the strategy does work. It can make good money. It gave me, but I'm not performing it correctly. I'm not in the right place at the right time. I'm not taking all these setups. So this is a really important tool to make sure that you're recording the setups you don't take, because they will be in the backtesting results. The results that sold you on the system, that convinced you this was a profitable thing to do, will include some of these, and you're not taking them. So, for example, we've got a couple here. Fib retracement here. Again, you can either highlight down here by going on those or up here, which is the easiest way to do it, in my opinion. So, Fib, why didn't I take these? Two of them because they were nighttime setups. That's less relevant if you did your backtesting and during your backtesting you did manual backtesting or automated backtesting with time parameters. So you told it, I am only trading from X o'clock to Y o'clock. I will only take setups between these times. In which case you don't need to record missed trades for nighttime setups because they're not included in your backtesting. If they are, if you've done an open-ended automated backtest, it will trade every setup. So in here you've got two nighttime setups and one away from screens with work. Again, lots of other reasons here that you could have done it. Some of them, if you're on holiday and you miss setups, it's fine. It's nothing to have to beat yourself up about that. You just have to accept you're away on holiday, you missed some setups, but it's important to put them in here because otherwise the rest of your results won't compare to your backtesting, and you'll have a very odd month. The profitable trades will be out, the successful trades will be out, everything will be all over the place. So it's important to put them in, but to highlight that you're away on holiday. Other things like away from the screen for work, away from the screen for family, nighttime, they might be a question to ask yourself about whether the strategy works for you in your life, whether the setup is correct. Do you have the time to trade? For example, a day trading strategy, if you're at work all day, very quickly you're going to have lots and lots of these. So away from the screen to work, away from the screen to work, away from the screen to work. Had I traded them all, I made a fortune. I only traded 3 because I came in my lunch break last week and I lost £1,000. Further down, there's some more psychological things: fear of loss, previous trading results, strategies record. So does your strategy have a particularly poor record? Have you lost the last 4 with that particular strategy? So you thought, oh, I know it's a setup, but I'm not going to take it. So you didn't take it. Again, that it's really important to know why you haven't taken a trade. It's one thing to take a trade and it be unsuccessful because you didn't follow it through. It's another thing not to take a trade for these same reasons. News. Was there some news coming out? Was there some news in the morning that you thought, oh, I won't trade today because there's been an explosion in somewhere, or the markets are all over the place? Again, just bear in mind, when you backtested, did you avoid NFP in your backtesting? Did you make sure you avoided all days where there were any kind of economic releases? I don't. I backtest generically. So that means really you got to get on and enter them no matter what's happening. Because that's what your backtesting is built on. And if you don't, because you're scared of the news, you just need to record it here and then think carefully about whether that's the right thing or wrong thing. Advice: how many times you've seen a setup and somebody's come up on social media, or you've had a text from a mate who's a trader, and it says, oh God, not touching GBP USD today with the inflation announcement. And you think, oh yeah, no, I better not do that. Your backtesting results have no idea that there were any sort of announcements, or they're just testing every setup that fits your criteria. So don't think with hindsight that you can improve that strategy by selecting your trades based on these things, because it's not true. Unless you want to go back and backtest and see what the reality of that is, by all means do. But if you haven't done that, don't do it. But this is a great way of recording that. But you have to be honest. You have to put this data in here. You have to hold yourself to account when these things don't happen, when you don't take these trades. You have to be honest why you didn't take it. This doesn't have to be seen by anyone else. This is your trading dashboard. This is your trading business. This is the nuts and bolts of what is going to make you a more successful trader. So don't be shy of putting in here exactly what's happened, because I promise you that it will make a more immediate difference to your trading success than anything else, probably short of having a personal mentor, which is probably the only thing that is going to kickstart your trading faster than this. The final one here is a little table of performance. This does exactly what it says in the tin. I'll just get up some results here. So there you go. So this particular trade, this just gives you current backtested results or control and the difference. So is it different to your expectations? Yes, a lot in this case. Current is a risk reward of 5 to 1, reward to risk that should be, whereas it was 1 to 1 in the backtested results. Profit and loss is huge compared to backtesting results. Total trades is down. That's interesting that it suggests that it's got, looking at these, it suggests it's got 10 losers to come, doesn't it? Anyway, if only life was that simple. Average trades per week, yeah, so we're down on, but it basically just gives you numeric results to look at, to compare your current strategy performance with your backtested results performance. Again, I mean, interesting stuff. The graphs I find more useful, but this is here for those of you that like numbers and want to deal specifically in the numbers. All that information is just here. So that went on at least 20 minutes longer than I thought it was going to, but I do hope it's been useful. And I hope to see you in the next video, where we'll have a look at the next part of Traders Journal. Thanks.